Hello, everyone. Welcome to Verifi's webinar on growing customer longevity in the frictionless age. This webinar is being presented by Rick Lynch, the payments expert and Senior Vice President of Business Development here at Verifi. Today's webinar is being recorded for your future reference and will be sent out upon conclusion. Prior to the conclusion of the presentation, we will be opening the forum to respond to your questions. Questions may be submitted throughout the session by the Q&A function at the bottom of your guys' screen. At this time, I'd like to pass it over to Rick.
Thank you, Brendan, and thank you everybody for logging into this presentation. Today we're going to talk about growing customer longevity in what we call the frictionless age. We'll jump ahead here quickly to the agenda just to highlight for you. We're going to discuss briefly the evolution of payments in general. We'll talk about frictionless purchasing and payment types. We'll then get into some specific detail about the pre and current and post checkout process. And then finally, the specifics related to what occurs when a chargeback happens and the damage that does to the customer relationship and how we can manage that. And last, some customer wins. So jumping quickly into evolution of payments, obviously this is a huge topic and we're not going to get into it too deeply, but it's important to illustrate how much has changed over really the last 50 to 60 years, which is a relatively short period of time. We've gone from cardboard credit cards to Alexa as a purchase method. We've seen the mag stripe evolve, and now we've seen the recent migration to EMV and chip cards. We've gone from face-to-face to card not present and mobile. And when you look at the hardware, right, we've gone from the knuckle busters all the way into kind of highly evolved POS devices. And then finally, the method of payment itself, from cash to credit card, and now things like Bitcoin and Venmo are being used for purchasing. So massive change, constant change happening within the industry. It's a very fast-moving industry that's driven by technology, but it's also driven by customer experience and the ease that we want to give customers in terms of how they purchase. All this innovation was designed to help customers make purchases easier and faster. And the goal is that if we can do that, they're more likely to buy, they will buy more often, and that's good for the business, that's good for the consumer. The bottom line is, to grow your customer longevity, we've got to make purchasing easier and a better experience for customers. And that's really the theme for our talk today. So jumping ahead to the online checkout and really the smartphone device, this is really the epitome of making it easy for consumers, right? There are 2 billion customers plus globally now that have smartphones in their hand, and they have access to the world. They have access to your store, and in a matter of a few seconds, they could potentially buy from you. So nothing could be easier than this device. But with a smartphone and with a mobile device, as well as just e-commerce purchasing in general, because of that new channel of purchase, there are risks. In particular with smartphones and mobile devices, merchants are often collecting less information about a customer in that format than they have been in the traditional face-to-face world or in the desktop e-commerce purchase model. And so we need to kind of address those risks. When you look at the payment types that are being used, these 6 payment types here are just kind of a symbol of the very many types, right? There's hundreds of payment types out there now. We've got traditional credit and debit cards. We've got peer-to-peer solutions like Venmo and Square. E-wallets, geez, it seems like there's a new wallet that comes out every month. We've got ACH as well. And then you've got decentralized anonymous options like Bitcoin that are emerging. And of course, PayPal, which was one of the leaders in the alternative payment movement. Again, all of these different purchase methods are being made available because consumers are looking for different options. What we have seen is that the more options a consumer is given, the higher the conversion rate. We want to give the customer a way to pay in the way that they want to pay. And that's why, despite the dominance of the major card brands, Visa and MasterCard, et cetera, there has been a lot of success in the alternative payment options as well. So jumping to the checkout process, what we're really looking at are the checkout process in different stages. From a customer experience standpoint, what can we do to make that a better experience for the customer a seamless experience? And how does that also protect us as a merchant business in making sure that we're letting the good in and not the bad? Clearly at pre-checkout, we've got a number of things that have become very commonplace. And the good thing is most of these steps are being employed passively behind the scenes with as little impact as possible to the customer experience. 3D Secure in particular has come a long way, particularly 3D Secure 2.0, which is just out recently. That this is really focused on giving the consumer no impact to their purchase experience, but at the same time giving the merchant the liability protection that 3D Secure offers through the card brands. So very important at pre-checkout to employ that. There's other solutions like IP geolocation that can be very valuable. Device identification or device ID, where you're capturing the device characters and attributes of the machine or the handheld that the customer is using to make the purchase. And KYC data. All these things are important in terms of the pre-checkout evaluation of that consumer. Clearly, in most cases, 95 to 98% of the time, the consumer is a good customer, and you're going to let them sail through the process, and you're going to have a good purchase with that consumer. And of course, a small percentage of the time, the customers are clearly going to be bad. Say, 0.3 to 0.5%, less than 1% of the customers are usually those obvious criminal or bad transactions that you don't want to accept. The real challenge is that gray area. 1 to 2% of those transactions that have some attributes that may be concerning, but others that are not. And that's, I think, obviously where merchants really spend most of their time in terms of manual review and making sure that they are not turning away good customers, but at the same time avoiding the risk that a bad customer represents. And this is really the challenge, right? The danger of turning away that good customer is important because you're not only losing the purchase that would have been captured that particular day, but the customer insult factor that occurs can ensure that that customer never comes back to you. So the long-term value that's lost by turning away a good customer that falls in that gray area is of key concern for businesses that want to build customer longevity. One of the things that we'll look at here is how you can accept more customers that fall into that gray area at this point, at the pre-checkout or checkout process, and have an opportunity to address that customer later in the cycle before it becomes a chargeback, but post-authorization. During the transaction checkout process itself, I think this is pretty straightforward. You're going to capture things like AVS. You're going to capture CVV result, not the CVV number, but the result of that CVV process, the card verification value. You're going to capture the transaction characteristics that you can and store those so that you have information about that purchase. And then in particular, it's probably a best practice for any business model, but particularly for recurring billing models. It's important that the merchant includes information about the cancellation process for that subscription as part of that checkout confirmation page and as part of that digital receipt that's sent out post-transaction, making sure the consumer is aware if there's a point where they decide they don't want to continue to be billed, that they have clear information about that. And this is tied to some changes that have happened in the last year and changes that will happen later this year regarding how subscription billing purchases should be handled and what the card brands particularly expect merchants to be doing to make sure customers are informed. Moving to the post-checkout phase, there are two key areas that a business can focus on in terms of their communication with the consumer to make sure that the customer has clarity and has had a good experience with that merchant. Obviously, following up with the digital receipt is key. Got to do that. The purchase history, though, and making that purchase history readily available and accessible to that consumer is important as well. When you look at post-purchase email communication, you want to email, whether that's in the receipt or post-receipt in a separate email, information about the customer support that's available, chat support. If that customer is using a product that requires any kind of support or questions they may have, you want to make sure it's clear to the consumer how they can gain access to that support and get in touch with you to support that product. From a marketing standpoint, this is really a separate category, but other communications that you may employ regarding the purchase could be related to post-purchase surveys, loyalty programs, incentives, things that may stimulate additional purchases such as credits, discounts, coupons, or maybe enrollment in a loyalty program for the first time. These are important communications. You don't want to overwhelm a customer with them, so the timing and the frequency is something that needs to be factored in. But the customer will appreciate that they didn't just check out and heard nothing from you ever again. They want to see that kind of high-touch relationship. Again, it has to be tempered with making sure that those communications aren't overly heavy in terms of the salesmanship, and that the tone is proper. But the communication itself is critical to building that customer's relationship with you, building their awareness of your brand and recognizing you and thinking of you, of course, down the road for future purchases. The bottom line with all of these different steps in the purchase process is really communication. The more communication that you have with a customer, the right kind of communication, the happier that customer is going to be, the more comfortable they're going to be with you as the solution provider or service provider to them. So it's really critical that this is part of the game plan in terms of building that relationship and improving customer longevity. Unfortunately, all of these efforts will not guarantee that you don't have some customers that, for whatever reason, have a concern or problem with their purchase. And historically, that has always meant that you received a chargeback. When we talk about what are the root causes of chargebacks, not the chargeback reason codes, but the root causes, I think most merchants will say, hey, it's fraud. The reality is that's not the main cause. The number one cause of chargebacks is a customer calling their bank first before they call a merchant. Why did they call the bank first? Well, they have been trained that the bank is, in their mind, the path of least resistance, and that they're more likely to get the answer that they want, which is, I'm sorry for the inconvenience, here's your money back. That's not an ideal outcome for the merchant, of course. And what we know is that better than half, right, 55% of the time, the disputes that a bank takes on behalf of a merchant is a dispute that could have been resolved and did not need to become a chargeback. It could have been solved if the consumer had just simply called the merchant. So why didn't the consumer call the merchant? The consumer was afraid the merchant may have a long hold time. Maybe they were not going to answer the phone at all. Maybe the merchant did not make the information that consumer needed in terms of knowing how to get in touch with them obvious or easy to access. If you think about the way that we purchase in an e-commerce channel, we can purchase in a matter of a few seconds, and it's very easy to buy. It is not necessarily easy to follow up and deal with a dispute. It can take a much longer amount of invested time for a consumer to work to get in touch with a merchant. And sometimes they deal with a lot of resistance and friction in trying to get in touch with a merchant. So that issue will cause the consumer to stop contacting the merchant altogether. And that's not the behavior we want. Obviously, there is going to be fraud that occurs. There may be issues with the product that's been damaged, or it's the wrong product that was delivered, billing errors, those types of things. But the number one cause of consumers not contacting a merchant is because they've called the bank first. So again, when we go back to communication, how do we increase the awareness and the visibility of how that consumer can communicate with you so that they don't call their bank and you can deal with that dispute and get the outcome that you want, which again, in many cases, better than half the time, should be a customer that has been satisfied, the sale has been saved, and there's no need for a chargeback or a refund to be issued. When chargebacks do happen, when that sale can't be saved, why is that bad? Obviously, the sale has been lost. The product may have been shipped and may never be recovered, or the service may have been delivered and that can't be recouped. More importantly, through some work that Verifi did with Javelin Research, we found that 63% of the time, a customer that goes through the chargeback process with a particular merchant will never buy from that customer again. You can essentially assume that a customer that's gone through chargebacks is a lost long-term customer. So that's the worst case scenario when you're worried about customer longevity. You do not want a customer to go through that chargeback process. You want to avoid that chargeback process at all costs. There's nothing good that comes from that. There certainly can be an effort to fight that chargeback and salvage it, and that may help you to recoup some of the near-term loss. But at the end of the day, most likely you've lost the relationship with that particular consumer. When you get into the chargebacks that do happen, again, there is a case for fighting those disputes that you need to fight, particularly if you've got merchandise that's valuable and you want to recoup the revenue for it. Critical evidence that you would employ for disputing a chargeback are things like the customer information, any kind of communication that customer had with you, customer service logs, chat transcripts, CRM notes, certainly proof of delivery from the carrier if it was a physically shipped item, or proof of use or access to your product if it's a digital service. I would also highlight business-specific evidence, and this relates to the fact that the card brands now accept a category of evidence called compelling evidence, which is a broad category. It can include anything that the merchant considers to be a clear determiner that customer did make that purchase. Some simple examples: GPS coordinates. Obviously, particularly with mobile phone devices, GPS coordinates in some cases are readily available and accessed and captured by a merchant. If, for example, you are a rideshare company and you're offering rides to consumers, there is usually a GPS capture of the pickup and drop-off point as well as the route that rider took. If a customer is calling and claiming they didn't make that purchase, and you can provide the ride route back to the issuing bank to show, hey, they had us pick them up at their office and we dropped them off at their home address, that's going to be very strong, compelling evidence to combat that claim by the consumer that they did not make that purchase. You have things like online profile information. So many websites now are gathering expanded data, whether it's a social media network, whether it's an online dating network. You're gathering a lot of information beyond the traditional information that's captured in a purchase, and that can be employed in the chargeback dispute. Social media is becoming really an interesting pathway in terms of disputing transactions, whether it's Twitter or Facebook, what have you. Consumers, particularly younger consumers, are very willing to post a lot of information, and oftentimes their profiles are public. I'll give a quick example. One of our clients that's a ticketing client had a customer that bought some very expensive concert tickets. A few weeks later, they fought that charge and claimed that their card was stolen and that they did not make that purchase. I think the total was around $1,200. The ticketing dispute team went online and looked for that customer's profile. They happened to find a profile of that customer on Facebook. It was public. And conveniently, that customer had actually posted photos of themselves attending the concert that they claimed they did not make the purchase for. So obviously, the ticketing company was able to use that information to prove the customer did in fact make the purchase and actually attended the event, and they won that chargeback. So a great example of very business-specific evidence that can be employed in the compelling evidence category to help fight a dispute. So in terms of customer experience, as I mentioned earlier, the goal is that we want the customer to contact you, the business, before they're contacting their bank. And if they can do that, that gives you an opportunity to avoid that transaction from becoming a chargeback, and that dispute can be resolved. At the same time, consumers have been trained to operate this way for decades. And we know, as I said earlier, 76% of consumers today are taking this action of contacting a bank first rather than the merchant. It'll take time to change that behavior. In the interim, what can we do? So what Verifi has spent the last decade working on is building networks that connect our banks, our issuing bank partners in the US and Europe, with our merchants. We have over 75 issuing banks. We have over 25,000 merchants in our network. And our goal is to intercept those complaints as they go into the bank and migrate those disputes over to merchants so that merchants can have that opportunity to work with the consumer to resolve that dispute and prevent that from becoming a chargeback. In the case of Order Insight, this is a solution that provides all of that compelling evidence and all of that critical transaction data we were just talking about. But rather than doing it over weeks and months in the traditional chargeback dispute process, Order Insight is delivering that information in a matter of a few seconds directly to the bank and the consumer, and allowing those disputes to be resolved within a matter of a few seconds or a few minutes in a live conversation. We're seeing better than 50% of the disputes that are originated through Order Insight getting resolved, and the consumer and the bank agreeing not to proceed with the chargeback. So it's very powerful and very effective at intervening on that dispute before it becomes a chargeback, and allowing that dispute to be a good outcome so that we don't have that breakage of that customer relationship. In the case of CDRN, very similar, where we're giving that pre-dispute, pre-chargeback notification to the merchant so that the merchant can learn about a dispute, oftentimes within a day or two of the authorization, many cases before the product has even been shipped. So the merchant can, if they haven't shipped a product, they can hold shipment, they can follow up and give the customer a call, try and learn more about what happened with that dispute. And in the event that the customer does not want to make that purchase, then the merchant can refund that cardholder, avoid the lost merchandise, and move on without, again, that bad experience that a chargeback has in terms of the customer relationship. Of course, as I said, chargebacks do happen, and Verifi does fight chargebacks. And for those disputes, we can help with the disputing of those chargebacks. But really, I think the key from a longevity standpoint is employing things like Order Insight and CDRN, along with some of the communication steps that we talked about earlier, to really intervene before we ever get to that chargeback. That is the worst case scenario, and that's what we want to avoid. Okay, so that covers the presentation today. I'll open up the floor to any questions.
Yeah, and feel free to submit your questions in the Q&A function at the bottom of your screen. Rick, we have one question during the presentation. We've got, should I always require two-factor authentication given the global scope of PSD2?
The PSD2 process is not something that should deter you from employing the authentication process. The more you have, the better. So by all means, employ it, and don't let that deter you from it.
Thanks, Rick. We've got another question here. Will too many combined authentication and fraud prevention tools on the gateway impact my authorization rates?
To some degree, it can. Certainly, anything that you're doing pre-authorization, if it's a filter or a gate that may trigger a decline or a choice by the merchant not to accept authorization on that customer, it can. I think there's two considerations. One is the cost. If you have, for example, a known list of repeat customers, you may not want to employ things like 3D Secure or a fraud scoring tool that has a per transaction cost associated with it on a customer that has a good and long purchase history with you. So I think you need to be selective in what you're applying pre-authorization to those customers that are first-time customers. You may also have products that you know to be more likely targets for fraud. And so you may choose at a product level to employ those pre-authorization screening tools on the products that are most likely to be targeted for fraud and theft. But there should be some selective application of those tools from a cost standpoint, and also, of course, from the risk of turning away a good customer when you know from past purchase history that you don't have a concern.
Thanks, Rick. We also have another question here. Most of my customers have mobile purchases. How can I reduce shopping cart abandonment?
So mobile purchases are typically streamlined to require less steps, less clicks, less data entry than other methods of purchase in traditional e-commerce. The capturing of cardholder data for card on file, if you have a registered customer, can help. I think a lot of times the abandonment statistics that I've seen show that customers in the mobile environment don't want to be hassled with having to pull the card out of their wallet. They find it difficult to key in their card number, over that mobile device. So if that customer is using a wallet, then that helps. Or if you're doing card on file, that will help them to kind of pre-enter that information. So yeah, I would say that the ease of payment acceptance would be key. There's also, of course, certainly supporting the wide range of payment types that regionally that customer is shown to be interested in, right? If you limit the purchase options on the mobile device only to the traditional card brands, that customer may not prefer those and may choose not to make the purchase because of it.
Thanks, Rick. Those are all the questions that we have for today. Thank you everyone for joining Verifi's presentation, Growing Customer Longevity in the Frictionless Age. In case you missed anything, you'll be sent a link to the recording of today's webinar for your future reference. And thanks again for joining.
In trying to get in touch with the merchant. So that